We're joined today by Fabian Siegel, who is the CEO and co-founder of Marley Spoon. Thanks for your time. Last week, we kind of saw the first signs of, or the first announcements in regards to a COVID vaccine. And I saw the market kind of react where you had a switch out of COVID winners into COVID losers, if you like. And, you know, Marley Spoon suffered as a result of that. And your share price has kind of declined since October. So that's kind of the reaction of the market in a vaccine sort of world. So my question is, do you believe the longer term structural shift in groceries from offline to online will be enough to kind of counterbalance the strong tailwinds you've had from COVID?
Yeah, it's a good question. And what we've seen since the second quarter, calendar quarter in 2020, since COVID hit, we've seen two things happening to our business. We have a business that's primarily driven by repeat orders. More than 90% of our sales are recurring. So it's a highly recurring subscription-like business model where consumers switch from the supermarket to Marley Spoon when it comes to weeknight cooking. Now, this base of customers, we saw a dramatic change in user behavior, which in fact we've never seen before in the last 6 years. And my 20-year career when it comes to direct-to-consumer business models, I've never actually seen that existing customer behavior changes globally in such a dramatic way. And so that behavior meant people wanted to have more food in their boxes. They wanted to have more boxes per month because they were locked at home. And so this base behavior created a spike in incremental revenue in the second quarter. And it started at the beginning of the quarter and probably ended or peaked, I would say, in May. So in May, we had this peak of behavior when it comes to skip rate and basket sizes. And since then, it started to normalize to the point that at the end of the third quarter, it had normalized by 90% in Europe, and US, Australia, maybe 50% back from this dramatic peak. So you have seen an existing base behavior that suddenly wanted more boxes, and you have incremental sales from that behavior without us doing anything. But this, in a way, sales bump we experienced in the second calendar quarter was already lower in the third calendar quarter. And all our models, we assume it goes back to normal. So this normalization we've always had planned for and put into our guidance statements also accordingly. And our ability to narrow the guidance at the upper range of our guidance range now for the full year, which we did last time we informed the market, is really a factor of that normalization happening, though not happening as fast as maybe we had initially thought could happen. So that's one part of the story. So we have this amazing tailwind in revenue, and this tailwind, of course, will melt away as the world goes back to normal. And I'm a big believer that the world will turn back to normal. There will be a vaccine, and hopefully in the second quarter next year, calendar quarter next year, there'll be vaccine also available widely, and hopefully we'll slowly get through this, that we're all in this here together. Now, there's another behavior, and I think that's the key behavior here, which is how fast are we growing in subscribers? Because over the past years, the fact that our business grew so substantially and rapidly was because of the channels which you mentioned, is where people switch from offline to online shopping. And we've seen this across all verticals. Now, toys is more than 40% online, fashion 30% online. So all these big verticals switch from offline to online over the last 20 years. Now, groceries is at the beginning of the year, depending on the studies, between 3 and 6% online. So it's really a category that's been lagging. But it's also at the same time the largest category of consumer spending. $800 billion are spent every year in the US alone on grocery. So when you think about it, the category is by far the largest. There's nothing you spend more money on than cooking, maybe except your mortgage. But what do you eat is probably the biggest amount of expenditures. And this channel switch had just started and to go from offline to online over the past couple of years. Now, all e-commerce adoption has probably accelerated this year. And I don't think it'll go back. It never goes back. It's like people adopt more and realize, oh, wait a minute, I don't have to go into the shop to solve that problem. And in our case, when it comes to weeknight cooking, I don't have to go to the supermarket to solve that problem. And that's a lasting change in behavior. Now, we see on average a customer that switches from the supermarket to Marley Spoon spends around 240 Aussie dollars per month. with Marley Spoon. That's money that doesn't go to Woolies and Coles anymore. And so this switch has accelerated also for us. So while we've seen COVID happen to us, we've seen an accelerated growth of subscribers. So in a way, we saw suddenly a development we had probably foreseen to happen over 12 to 18 months play out. It played out in 6 months. And so while we've experienced this, those customers are quite sticky customers. They behave as we expect them to behave. They stick with the service. So even when there's a vaccine, they're not going to stop cooking. They're still going to eat. And they're still going to realize that cooking with the meal kit is better than the old way with the supermarket, because that's what we've seen over the past years, that users switch permanently when it comes to weeknight cooking from the supermarket to us. So what we are seeing is we're seeing that while maybe the tailwinds for our base behavior is slowly going away, the underlying bigger story is that we've accelerated subscriber growth and will continue to grow from here on. So therefore, I don't see us at all going down in our business. Quite the opposite. We'll continue to have solid growth in the future. And we do expect 2021 to be a bigger sales year than 2020, of course. So we continued growth will happen to our business. So therefore, we are not worried about the vaccine, quite the opposite. We're looking forward for finally having the vaccine and getting through this together, because it does not really hinder our growth path that we're on.
And Fabian, of course, you still see a lot of COVID cases in the US and Europe. You still got the tailwinds that were present for your business in Australia, for example, continuing in the US and Europe. They are your largest markets. How are things looking for you in those countries?
Yeah, I mean, as we are going now into the winter on the northern hemisphere, and that winter goes together with the second wave, or in the US, some people call it a third wave of COVID, which of course is dramatic. We see that when it comes to our business, it normally, of course, has an effect that is beneficial for our business. People tend to spend more time at home, either because it's government mandated or because they just feel more safe, and going to the supermarket isn't part of what they want to do with their day if they can avoid it. So that normally tends to be favorable for our business. So as nobody knows how strong this second wave in the northern hemisphere will develop, it normally is favorable for our business. But as I mentioned earlier, it's not really the big story that we count on. It doesn't matter. It's more tactical, whether you have a little bit more base behavior, a good guy in a certain quarter. I think the underlying story is important. We continue to grow our subscriber base. This happened dramatically faster in 2020, but it's continuing from there on going forward also into next year. So whatever short-term benefits the business might experience from these current behaviors, they actually are long-term not really relevant. Long-term, what we see is our business continues to grow on subscribers as people switch continuously from offline to online. So that is maybe the one thing. Maybe the other color, we do see favorable behavior. We do not see the kind of panic that we saw in April when everything was new and people really dramatically just stopped going to supermarkets, and at the same time supermarkets were empty as people bought up all bought the shelves empty in the supermarkets. So this kind of panic behavior we also don't see. So we see a beneficial effect from this environment, but we also don't see this dramatic panic that we had seen in April.
And you announced today to the market some restructuring of some debt. You have spoken about this previously. Can you explain what occurred there?
Yeah, we're very happy that we could, in a way, simplify our capital structure. We've been talking about this for the last 12 months, that this was an ongoing objective for us, that by the end of the year, we on the one hand side wanted to have a lot of convertible debt convert to simplify the capital structure, and also the last senior secured debt that we had in the capital structure, we retired and paid back that debt. For us, it shows the strength of our business. The strength of our business allows us to grow, but also allows us to simplify the capital structure. In fact, given that we had a long history in the past where we generated losses to grow and build the business, which also led to negative equity on the balance sheet. All of this is now cleaned up, and we have a positive equity on the balance sheet. We reduced debt dramatically to the course of 80 million euros. So you'll see a much cleaner, much simpler balance sheet that I think continues to underwrite our continued growth into the coming years.
Fabian Siegel, thank you for your time.
Perfect. Thanks so much for having me.